Hello and welcome back to the note. Well, we have our news from MSCI. I will try to give you a quick initial response. They are continuing to be on course for adding A shares to their main emerging market index as advertised, but the bottom line is no, they're not prepared to do it yet. They still need satisfaction from authorities that the allocation of quotas for foreign investors to invest in China is good enough, that there is enough liquidity and capital mobility in the new schemes that have been put up, and that there is clarity over exactly who has the beneficial ownership of separate accounts in their new program. Ultimately, the Chinese authorities have failed to convince MSCI for now that they have done enough. Otherwise, there is the risk that you would have a benchmark where some people benchmarked against that index would be able to access A shares and others wouldn't. And I suppose that would indeed be unfair. Now, that for the time being shifts the emphasis. We now know that A shares are not going to be in the main MSCI EM index until May of 2017 at the earliest. The decision to announce definitely they will could come at any time, but they can't actually join the index until then. We now need to see that how this affects the Chinese stock market itself. Presumably it's a negative on its face, and an influx of foreign funds would have been useful in terms of keeping the valuations high. Now perhaps the concern will shift to exactly how people are going to allocate assets to China. One very interesting point that's been made to me, if you look at MSCI's calculations, once they include A shares at 100% of their full weighting justified by their market cap, they would at the moment be something like 44% of the entire emerging markets index. In other words, if you were going to buy this index, you would be hugely exposed to China. It begins not to be a very diversified index anymore. That is an issue for anybody trying to allocate assets to emerging markets. I think you're likely to see a profusion of new asset classes such as Asia ex-China, emerging markets ex-China, or China A shares only in future. One point that was made to me by Nick Smithy of Emerging Global Advisors, which I think makes a very great deal of sense, is that the bottom line is China is now too big for this index.